selling pressure on global markets has eased, but caution persists. On Tuesday, all three major U.S. indexes closed in the black, although they paired gains late in the day and clawed back less than half of Monday's losses, which were the largest one-day percentage drops in months. The bellwether S&P 500 remains nearly 4% below its all-time high reached 2 weeks ago. The Dow Jones Industrial Average rose 207.06 points, or 0.82%, to 25,532.05. The S&P 500 gained 22.54 points, or 0.8%, to 2,084.41, and the Nasdaq Composite added 87.47 points, or 1.14%, to 7,734.49. Investors' nerves were calmed after Trump referred to the escalating trade war with China as a little squabble and added that they have a good dialogue going. Meanwhile, a Chinese foreign ministry spokesman told reporters that China and the United States have agreed to continue pursuing relevant discussions. Asian markets followed Wall Street higher Wednesday after President Donald Trump downplayed his escalating tariff war with Beijing and said a settlement is possible. Hong Kong's Hang Seng advanced 0.5% to 28,268.71, and Seoul's Kospi rose 0.5% to 2,097.78. Sydney's S&P ASX 200 was 0.7% higher at 6,284.20. On the data front, China's April factory output and consumer spending weakened as a tariff war with Washington intensified. The data prompted suggestions that Beijing will need to prop up economic growth with more government spending. Growth in factory output decelerated to 5.4% over a year earlier from March's 8.5% growth. Growth in retail sales declined to 7.2% over a year ago from the previous month's 8.7%. Despite the dismal Chinese data, regional stocks rose as trade tensions remain in market focus. Besides, weaker numbers fuel hopes for additional stimulus measures from the authorities. Meanwhile, European stocks surged late in Wednesday's session to wipe away early losses after U.S. officials said President Donald Trump was expected to delay auto tariffs by up to 6 months. A formal announcement is expected by Saturday. As a result, the Pan-European Stock 600 index rose 0.5%, buoyed by a 2% gain in shares of tariff-sensitive automakers and their suppliers, with BMW tacking on 3.1%. Frankfurt DAX and London's FTSE 100 rose 0.9% and 0.8% respectively. The news that Trump was planning to delay tariffs on European car imports for 6 months sent the euro higher on a knee-jerk reaction. The euro-US dollar pair spiked to a daily high of 1.1224, but failed to keep gains and retreated back to 1.12 as the USD index reversed the initial bearish note and moves up to the upper end of the weekly range near 97.70, despite mixed US economic data. The New York Empire State Index coming in at 17.80 for the current month, bettering estimates. On the softer side, headline retail sales contracted at a monthly 0.2% during last month. Industrial production contracted at a monthly 0.5%, the same results on manufacturing production and capacity utilization coming in at 77.9%, also below consensus. The greenback was also stronger due to lingering concerns over the trade war as a high degree of uncertainty as well as caution among investors seemed to prevail for the time being, despite the recent improvement in Trump's tone. In commodities, oil prices rose on Wednesday despite a surge in the U.S. crude stockpiles. Brent edged up as worries that rising tensions in the Middle East could hit global supplies overshadowed an unexpected build in U.S. crude inventories. U.S. crude stocks rose unexpectedly last week to the highest since September 2017 by 5.4 million barrels, surprising analysts who had expected a decrease of 800,000 barrels. Meanwhile, gasoline stockpiles decreased more than forecast, which limit the negative effect from rising oil stockpiles. At the same time, the weak economic data from the United States and China capped prices by fueling worries that the global crude demand could slow. Meanwhile, the International Energy Agency revised its forecast for 2019 growth in global oil demand 90,000 barrels per day lower to 1.3 million BPD. Brent rose above the $72 handle and then settled around this level, having registered a second day of gains in a row. Gold prices finished modestly higher on Wednesday, although remaining below the psychologically significant price of $1,300 as benchmark U.S. stock indexes shook off earlier losses to move up by the time gold futures settled. U.S. stocks gave up early losses on Wednesday to trade higher, with caution around a U.S.-China trade spat and weaker than expected U.S. retail sales data kept bullish sentiment in check. The bullion had to erase earlier gains as U.S. and European stock indexes turned positive after news that U.S. President Donald Trump plans to delay tariffs on auto imports. And that is all for today. Thank you so much for watching. Please click subscribe to always be in touch with the latest market news.